And the bull chasing land values higher may be running out of breath. Rabobank International says the 5-year climb in prices may peak this year. The group anticipates increases in interest rates and lower crop prices may end the historic surge. In 12 Midwestern states, land values went up an average of 23% in the last half decade. But Rabobank says the spike isn't a bubble. Rather than bursting, they expect land costs could see a gentle fall as much as 15% over the next 7 years. Al Pell and Richard Brock recently sat down to discuss land values. They join us with this morning's analysis.
Richard Brock from Brock Associates, our guest here at the Agribusiness Desk. We're going to talk about land prices, and I still having difficult get over agricultural land selling for over $10,000 an acre. You're telling me it's more than that.
Oh yeah, typical sale in Champaign, Decatur, Illinois area now is over $12,000 an acre. Everything's pretty much bringing that. And you know, if you take a look, Al, at today's corn prices, though, and you take 220 bushel corn yields plus, you can justify it at $7.50 corn. The question is, what happens to those land values? I think when corn starts printing with a 5 in front of it instead of a 7,
right.
And sometime in the next year and a half, I think that'll happen. All bull markets in corn eventually lead to bear markets in corn. This one's not going to be any different. We are at a new plateau. I'll not argue that. You know, that low might be $5 going forward, but there's a big difference in cash flow in that land at $5 versus $7.50. And our research team did an interesting study this past week where they took a ratio of land values versus cash rents, and they used USDA statistics, which are pretty conservative. But farmland in, say, Illinois and Indiana and Iowa, for example, is trading close to a multiple of 30 times the cash rent.
Wow.
And the peak of the market in 1980, I think, was 22. And I'm not saying that's going to lead to a crash. I'm just going to state that history tells you when that ratio gets that high, it's getting pretty close to being done going up. And I think you would at least level this market off if you went back to $5 a bushel. The difference between now and 1980 is we had high debt and high interest rates back then. Now we have very low debt and low interest rates. So you cannot have a sharp drop in an asset value like farmland without having forced liquidation sales, and you can't have forced liquidation sales if you have low debt. So, you know, we're going to stay very high. There's no question we've gone to a new plateau. But would I be wanting to buy land right now at $12,000 an acre to farm? Probably I would not. You know, I think the risk level is very, very high at that price level.
Okay, thank you very much. Richard Brock's been our guest this morning here on Ag Day. Back with more in just a moment.
For a 5-week trial to the Brock Report for only $20, call 1-800-558-3431. See for yourself why thousands of farmers subscribe to the Brock Report.